There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money. Sauga 960. Darren Long is your guy, reaching out anytime. Educate yourself on how you should be investing, building that portfolio, hedging your portfolio as well with hard assets, including gold and silver. We talk about a ton of stuff on the show, not just about the metals, but how to acquire them and the whole world within hard assets and how to attain some. And like I said, get your portfolio in tip-top shape. Reaching out anytime, by the way, 1-888-335-8645 and deltaharbor.com. Delta Harbour with a U. This investment, this show is all about you and to your benefit as well. So we got a lot of stuff to get through on the show today, Darren, but we always start with a wee bit of an update as far as the metals are concerned. How are things this week, pal?
Things are good, John. I mean, we're coming into probably the tail end of the summer doldrums as far as markets are concerned. I mean, volumes are down. That's the same in stock markets. It's the same in many markets, including gold and silver. But there are some little things that we're going to discuss this week on the tail here of the announcement of phase 3 for COVID in Ontario. Mm-hmm. And we thought what better way to do it in the show than to discuss our favorite two metals, obviously gold and silver. Maybe we'll spend a little more time on my favorite metal, silver. But ultimately, the name of this show this week is really one which is just basically a theme that repeats itself all the time. It's what have we learned? And, you know, now that we're coming into this new phase, things are opening up. You know, COVID is starting to be less of a thing every month thereafter. And we talked in the last couple of shows about dollars being, you know, pent up, hoarded in savings accounts. And so there's a little bit of that effect that we expect to occur. We talked about the likeliness of seeing the third quarter and fourth quarter results in the stock market probably remain positive, barring any major economic downturn events. But as far as gold and silver are concerned, coming to near the tail end of the summer doldrums, silver still holding the $26 mark and gold back up to 1,800 and holding nicely. Here in the tail end of the week as we tape, we're in a little bit of a buying binge for clients. We waited for lower prices and we were fortunate enough to get those. And yes, we do a lot of piggyback buying at Delta Harbour. So if you are a client and you like getting better pricing, we bulk all kinds of buyers together to try and get the best price possible on metals. We don't always have fixed prices all the time. We're always looking out for the client. But this market is looking pretty good right now, John. And you know, we're hearing this week a lot of news. We had RBC, CBC, National Post, CTV, Global. I read articles from each individual site on housing slumps and potential housing slumps. And they're looking at what we have been discussing for a few months now with all the possibilities of higher interest rates, the threat of inflation, peak home values, which look to have hit in March, now coming to fruition. And you're seeing all the mainstream media outlets discuss it. So once that happens, again, we're going to talk cycles today. We're going to talk about the peak of markets and how to avoid those errors. But the month-over-month numbers are small changes, but trends nonetheless. We've now got a full month of data underneath of our feet, and it may be slightly too early to tell if the trends hold, but there are little things that are starting to develop that are supporting the idea that we're going to have lower real estate prices. That's one big issue that's important for us here as we come out of COVID, because there's a lot of money on the table, a lot of people that are thinking, hey, what do I do? Is it time to jump into a house? Is it time to grab a hold of a different type of asset, maybe gold and silver? We'll talk about all of that on today's show as well. And in regards to what we've been discussing lately, inflation. big problem right now. And of course, we talked about over the last few shows, in particular, a few weeks back, but the Bank of Canada is easing up on a quantitative easing. They were doing about a $3 billion a month bond buying program. They've now lessened that to $2 billion, or going forward are going to be decreasing that to $2 billion. And that's about a 1/3 reduction, which is huge. And they are acknowledging the threat of inflation, though they say it is still using that dirty word transitory, which it is not. We all know this. We know better. And on our show Inflation a few weeks ago, we noted the problem with higher gasoline prices, higher food prices, higher living expenses. What has happened as a result of COVID is that we have less inventory everywhere. So higher everything prices on cost of living items. There are very few that have gone down, but obviously this is a big thing. Gasoline, a big, huge problem here as we get into the throes of summer. More people driving. I am seeing it hand over fist in my social groups on Facebook, Instagram, people taking off in the car. They're not really ready to get on the plane and go too far. I had cousins, I had relatives all getting in the car, going west, going east, lots of people traveling. So that means gasoline prices are going to impact the dollar that you have in your pocket. So purchasing power is going to be decreased, higher gold prices and silver prices to be expected on the base of that. And then we got interest rates, John. We talked about that as well over the last few weeks. They are going to begin rising, as we know. The Central Bank of Canada has already stated as such, and so has the Federal Reserve in the U.S. Other places around the world have all made note that interest rates are going to go higher next year. And already, when you look at the real estate situation, if we don't have a pullback very soon, about 90% of people can now no longer afford a house. The debt to income ratios are way too high for them to take that risk. It's no longer thought of as a great asset when you have to take, 6 out of every 10 cents to just be able to live under a roof. So that's getting to be a problem right now. And the Bank of Canada this week, as a result, obviously they held rates low, 0.25% federal rate. Unemployment remains high, 7.8%. So a lot of things that are happening right now in these last couple of months that point towards the potential for some gain when we see hoarded dollars and all the savings that have been put on the sidelines go into those markets and be spent. But more than likely, I think people's mentality is going to be get out, do some things, feel a little bit of freedom on the heels of this phase 3 announcement, but they are going to be cautiously optimistic. So what better time to talk about how to avoid mistakes in the past? And that's what this week is all about. So we want to spend some time with our good folks here, our listeners on Sauga and on our podcast and YouTube, talking about how to avoid those mistakes of the past.
And reaching out any time in between, 1-888-335-8645, of course, deltaharbor.com. And as you mentioned, Darren, we got a couple minutes to go here before we break, and I know we'll pick it up after the break on the other side. But the title of the show today, this week, is basically, well, what have we learned? Which, in school was always a scary question, because the answer was always, I don't know, fries and gravy or half price on Tuesday, ma'am. I don't know what I've learned, but here it's different. This is a good education. So give us some broad strokes in the last minute or two before we break, and then we'll come back and pick it up, pal.
Well, indeed, John, this is a show about how to avoid costly mistakes that we might have made before or prior to COVID in our investing or wealth strategies. And we're going to talk this week about new opportunities to learn from our mistakes. We're going to talk about a new phase of investing and where the cycle is at. We're going to talk about post-COVID behavior, new thinking, and why this is a great time for new wealth strategies on the heels of gold and silver ownership. And other hard assets will come to the fold as we discuss this, but ultimately we want people to get into the right markets. We want our clients to make the best returns. And we think right now that along with your traditional assets, you need to focus on being more diversified, and you have to have a different type of strategy. Gold and silver have long been two assets which love uncertainty. They perform dramatically well in times of uncertainty. And right now it looks as though, as we're heading forward into the next year or so, we're going to talk about what it means to, if liberals get a majority government, where our interest rates go, what taxes will do. And I think overall, this is just the right time in tandem with the expectation of higher gold, silver prices to make a fortune, to protect your wealth, and to make your family happy and grow some money here using gold and silver.
What have we learned? That's what we're going to focus on after a short break. Reaching out to, by the way, you want to follow Delta Harbour on YouTube as well. Subscribe to their channel, watch the videos, learn even more. Just search Delta Harbour with a U. You can do that. The phone number, 1-888-335-8645, deltaharbor.com. We'll continue. This is Hard Money right here on Sauga 960. All right, welcome back to Hard Money here on Sauga 960. Again, you can follow them and watch and subscribe, youtube.com/Delta Harbour. To subscribe and watch the videos, you can leave comments there as well. Of course, it's a big learning opportunity through YouTube and also the phone call as well. Have a chilled, relaxed conversation with Darren and the rest of his team about how you get invested or more invested in whatever the case may be with hard assets being gold and silver and other hard assets as well. 1-888-335-8645 and online to Delta Harbour, Harbour with a U, deltaharbor.com. Okay, what have we learned? Let's recap and get both feet into this, Darren. Take it off. What have we learned?
Well, basically, we're opening up. Here comes, phase 3 of this COVID plan in Ontario. And things are starting to move again. People are out, people are about. You're hearing about all kinds of possible potential outcomes as far as wealth is concerned. We're looking at stock markets, we're looking at real estate, where are we at in cycles and things of that nature. And of course, right now, John, with all that money on the sidelines, about 100 billion or so dollars on the sidelines. And again, this is not to suggest that every single average person has a ton of savings they put aside. But there is a segment of the population who can afford to diversify, can afford to hold gold and silver, who want to hold gold and silver or other assets like gold and silver. And so once they've done their due diligence, this could be the right way for them to add that diversity. But we're going to discuss the idea of being better prepared. And the first thing we want to discuss is whether or not we're cognizant that we're buying tops. And I read an important article this week from Better Dwelling talking about that 100 billion on the sidelines. And again, I didn't bring the article with me to the show this week, but we'll make it available on our social channels. And that article in particular discussed where that 100 billion is placed, saying that, hey, listen, even though there's 100 billion on the sidelines and it could well go into the economy to improve things, it doesn't necessarily mean it's going to get spent. And the people holding it don't necessarily mean that it's the average guy. So there is money on the sidelines. It's there. But the question really becomes, and again, this is going to be one that's a challenge for many people, where do I put that money? Is it recreation time? Sure, we have to get away. We have to go out and rent a cottage, get away for a weekend, go up north, maybe even out west, east. And for those that are going to take the risk, they're going to fly somewhere else in the world. But ultimately, that's only a portion of those dollars. And right now, our biggest concern is that people are going to be unable, because they're not clear. They have recency bias. They believe real estate is going to go much, 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 much higher. So buying now means, hey, by end of this year, I could be making money. I could be flipping this by spring. And that mentality is dangerous when we're near a top. And we think that the top has come and gone in real estate. That's our stake right now. We believe March was ultimately so far the high or the peak in real estate in Canada, in particular in Ontario. And when we're not paying mind to market timing, that is probably the biggest single mistake we make in the past that prohibits us from making money going forward. So that's the first place we start right there, John.
I know that, we discussed part of our discussion last week about being contrarian. I hope people caught that. If not, they can go back and listen to the other episodes. But it would be very valuable right now. I'm guessing a good place to start, yeah?
Yeah, being contrarian is a big thing. Last week, we did talk about how gold and silver is sometimes very contrarian. People buying it, even though we've been around, I've been dealing in these markets since 2004. There are some people that believe, that this market is come and gone, has already had its heyday, when in reality, maybe 1% of all globally managed assets are exposed to gold and silver right now. And that at its very peak in 2011, when, we had big rallies in gold and silver, the last big peak for both, that even at that point was only around 2%. So essentially there's a long way to go, because a good bull market will produce 20+% in participation. So we know gold and silver is a great contrarian, historically a great contrarian investment to your regular stock portfolio, bond portfolio, mutual funds, ETFs, all that stuff. It's really easy to hold. It's tangible. Hold in your hand. You can take it home, store it, put it inside a TFSA RSP. But not being contrarian is a dangerous thing because it means you're following the crowds. And again, we talked about recency bias. We talked about fear of missing out, FOMO, as you may have seen it written in various articles as you read about real estate in particular, and not really challenge ourselves to be working or investing against the grain. So that to me is a huge, tremendous risk that we want to avoid. And we did that show on Contrarian specifically for that reason. So if you are on our YouTube channel, which is just youtube.com/Delta Harbour, you can find that episode from last week. It is marked in the title as Contrarian Investing. And that is something that I highly recommend you listen to, because contrarian investing can make you very wealthy. And it has done so for the likes of Buffett and Gates and, all of the big investors, Elon Musk, investing against the grain or when nobody else is interested in something. So that's definitely a starting point.
YouTube channel's good, of course, as you just mentioned, Darren, and the phone number is always pretty sturdy, 1-888-335-8645, and online too, of course, deltaharbor.com. Well, now, in addition to being contrarian, finding value in different assets or mixed assets, what do you think about that?
Well, I think that you have to look for various assets. We never would think of coming on a show like this and, stepping on or poo-pooing the stock market unless we had really good data to prove it's on the downside. So people may still invest in stocks, and that's one part of a wealth strategy. And those traditional investments also include bonds, and for many in the last few years, real estate and those other assets that we've discussed sometimes ad nausea. But knowing gold and silver is one way to diversify your basket of wealth. You might want to add collectibles to that. Hey, listen, you might be into cars. You add a collectible car. Those have gone up tremendously in value. Maybe it's art. Maybe it's collectible spirits, a wine, a scotch, an investment that you didn't think about before. Those are all ways to add diversity to your wealth strategy, and they're tangible, hard assets, hold in your hand, which we highly recommend. And one of the mistakes we've made in the past, I guess, John, is that we've had all our eggs in one basket. And the proof is in the pudding. 30, 40, 50 years of data prove to us that although we think we're diversified by holding a range of different paper assets, maybe stocks, bonds, cash, and things of that nature, it turns out that the most negatively correlated assets to the stock market, to the bond market, to the cash market are gold and silver. And so those are two assets which we can use to diversify that basket of holdings. And in addition to that, as we said, we love real estate. We love land, income property, collectibles. There's a lot there that we can add to the overall basket. But the mistake that we've made is that we're not thinking that way. We're not looking at it from that basket of goods perspective. We get passive with our investing. We let other things get in the way. Mm-hmm. And if you're a person who does that, this is the perfect time. Coming out of COVID, into this new phase 3, this new idea that we're going to be able to have more freedoms, we're getting vaccinated, all this stuff's happening. Be positive about this opportunity that is being presented before you. Gold and silver are cheap. I don't care. Anybody could make the argument otherwise. I will fight tooth and nail to prove it with the data that they are cheap, relatively speaking. All of the ratios traditionally that show where we are in the value perspective of ownership of gold and silver are all low. And those ratios prove that right now you can own gold and silver as part of your wealth strategy, expect them to increase in value, bring you wealth in return, but also act as an insurance policy for the wealth you've already accumulated. It is a must. You have to consider it. And I believe it all starts just simply by going to our website.
Yeah, exactly. You want to do that. It's deltaharbor.com. And again, youtube.com/Delta Harbour is their own YouTube channel. You can, as Darren said, comment and look back at past episodes of this show and learn a lot more as well. As we get to a break here, 1-888-335-8645 would be the number. Short one coming right back. Don't go anywhere. This is Hard Money on Sauga 960. All right, welcome back to Hard Money here, Sauga 960. Darren Long is your guy. You want to reach out to Darren, Rob, Roy, member of their team at Delta Harbour to simply have a discussion and learn a lot more as well, and maybe get those hard assets into your portfolio. And the guys can certainly help you. 1-888-335-8645 would be the number. deltaharbor.com. That is Harbor with a U, of course. And then youtube.com/ youtube.com/Delta Harbor, their YouTube channel. Again, it's a place to look and learn lots more about diversity and investing and contrarian investing and everything we talk about on the show each week. It's funny you mentioned collectibles at the end of the last segment, Darren. It just made me think that last week you might have seen I think it's Zelda. I'm not a gamer, but Zelda and an old Super Mario from the 80s, both, unopened in someone's drawer, hundreds of thousands of dollars at auction. These two little plastic video games sold for, who would have known, but someone sees some worth in it. And they're going to hang on to it probably for another 30 years and see where it goes. So to your point, but I mean, we've been talking about to avoid mistakes when it comes to your wealth today. And there's a lot to discuss in addition to being contrarian and diversifying your wealth, how much time you give to your due diligence, right?
Well, how much time you give to due diligence in addition to contrarian thinking and diversification really defines how successful you can be as an investor. And it's a simple example. How many people, when they're doing something that's a hobby, and I'll use bike riding because we discuss riding bikes, and again, I'm not riding as much as you are, John, but one of my partners, Robert, just recently made an investment in a bike. And I listened to you guys talk about, before we do the show, the experience of buying and what you bought, and I listened to the timbre of your voice and how excited you get about that hobby and making that part of your life. And it's a healthy thing and it's a great choice for lifestyle. And I think to myself, okay, that's a lot of due diligence that you just put into something that you bought. And then I think, how much time does the average person spend doing that? And I would guess nowadays with the internet, the average purchase a person makes, a stereo, a computer, an iPad, an iPhone, whatever it is they're buying, they probably spend quite a bit of time thinking about where to buy it, best price, options, what's best for me, and so on and so forth. But when we think about money, which is the number one thing we use in our life to get those things, we spend very little due diligence taking time to understand what we're buying or what we're owning. And if I ask the average person right now listening to this show on the radio, this moment, do they know where their wealth is? The average answer would be no. And I would bet a steak dinner on it that the majority of people don't know. They'll be able to say, hey, I have RSPs, I have TFSA, I'm invested in such and such fund. But if I was to ask what the fund invests in or where their major focus is, what area of the economy they're focused on, they wouldn't know. And it surprises me because we try to instill this into every buyer that comes along. The importance of understanding that due diligence should be part of your thinking. If you want to self-direct your wealth, you have to spend some time at night during the day when you have a moment thinking about how important it is to understand what you're investing in. And I really think that due diligence starts with looking behind the headlines. Recency bias, when I do something that somebody else is doing because I think it's the right thing, like buying real estate right now is a perfect example. That is recency bias. You, in my opinion, and I'm not your planner or advisor, should not be buying real estate unless you know what you're doing. You should not be an average guy who is going to his 9 to 5. You and your partner have an income family, and then you're taking some of your hard-earned dollars and throwing it into real estate right now, thinking that by spring of next year, boom, 20-30% return. This may not be the case. It is a very dangerous risk to take. The headlines won't tell you that. I bring up the fact that this week we saw articles from National Post, CBC, RBC, Global News, so on and so forth, talking about the potential of a housing slump. Well, for 2 months, we've been talking about the risk already being there and on the table, because our job is to look behind the headlines, and it's what we do every day. It doesn't matter where I put my money, where I invest it, the due diligence has to be done. And so that reading behind the headlines is a very important aspect, reading the full story and not just trusting the headlines, because quite often the headlines are attached to media outlets, and the media outlets are attached to conglomerates. Those conglomerates are selling something, an opinion, a way of life, but they're not unbiased. And so we really have to dig deeper. And I think that people can sometimes make that mistake. So as we go forward here, phase 3, we're opening up money to spend. Let's be smarter. Let's do that due diligence. Let's look beyond those headlines.
1-888-335-8645 is the way to reach out by phone. DeltaHarbor.com. Darren, I think it's obvious that we've seen a lot of people make tons of money in something like real estate. A lot of it's herd mentality, a lot of it's FOMO, as you mentioned. But at what point do you think it goes from being maybe as you said, due diligence smart thought out investment to being versatile, or just simply one that's greed based? I mean, is there a problem with that mentality? Because I know it's not uncommon.
No, it's not. It's probably the single largest driver for people getting involved in investment. Why do the long, hard, tedious thing, which is having a balanced portfolio, when you can just go throw, whatever X amount of money into a penny stock trying to get wealthy next week? That's why we buy lotto tickets. I mean, let's face it, that's human nature. We all want to have a piece of that materialistic freedom that the wealthy experience on a day-to-day basis. But the wealthy are very educated when it comes to money. And we have a saying in the office that bulls make money, but pigs get slaughtered. And that's exactly pointing out the fact that greediness always kills a good investment. And case in point, I'm participating in the silver and gold market post 2008 and 9. A lot of people gave up, John. They just walked away from the market thinking this is over. Gold is sitting at around 650 an ounce. And within 36 months, it jumps all the way to 1900 an ounce. Silver sitting at $8.50, and within 36 months it jumps to 49. Those same people that left that market were calling me back at $30+ silver, and I'm asking them, where were you the whole time? When you gave up and I told you not to give up, when I told you that there are better things to come ahead, because the signs and the warning were all there. But they're calling when it got to 30, 35, $40 an ounce wanting to buy, which makes everyone's job more difficult. And that's recency bias. That's FOMO. That's not picking up on all these things and not learning from mistakes. And ultimately, when we're talking about being a bull versus being a pig and getting slaughtered, we want to talk about market tops versus bottoms and how greed clouds judgment. And ultimately, that's one of the huge errors of our ways. We do not see market tops. We don't want to believe it. We certainly aren't willing to look beyond the headlines because we want to believe a certain thing to be true. Therefore, we end up buying near tops and selling near lows more often than we should as individual investors.
So the big question, as we go forward here, the obvious question I think is what's the cure for greed? How do we stop being greedy? I mean, I like making money just as much as I'm sure you two as well. I've been a little bit greedy at some point. So what's the cure for it? Or is there one?
Well, keep it simple. As we go out of this segment, set goals. What's the goal? Is the goal to own a cottage? Is it to put the kids through education, through college, university? Is it to buy that boat? Is it to buy an RV? Is it to have freedom within retirement? All of those things are goals to plan towards. We see the commercials all the time talking about Freedom 55 and retirement and all these things, and big, huge trading firms arguing one against the other. Do I go no fees, all that stuff? But the fact is, it's about you, the individual investor. If it's not right for you, it shouldn't be in your portfolio. And ultimately, what you have to do is you have to set goals. You have to have plans. I want to do this. And that's part of the reason why I own gold and silver. I put all of my eggs into certain baskets. I spread them about, have well-balanced wealth, and then I add more gold and silver up and down. That's my pendulum swinging back and forth depending on what the climate is. We have to have a strategy. We have to have more thought involved in this. And we have the opportunity right now to do that. And we have to buy peaks. We have to get rid of buying peaks. We have to buy valleys. As I said, we can't buy tops of markets. Real estate's the perfect example right now. And we have to think about how important it is to understand we can't overbuy one asset class over another. If we have too much paper in our portfolio and not enough hard assets, what happens when the paper markets blow apart? Doesn't matter if you're balanced or diversified. Everyone's going to lose money versus holding the tangible assets, which act against those paper markets like gold and silver.
Lots more to learn, lots more to come, but we got to take a short break. We'll do so. Leave you the phone numbers before we come back. 1-888-335-8645. Just that simple. DeltaHarbor.com, Harbor with the U, and then YouTube.com/Delta Harbor. The channel's awesome as far as social media is concerned. You can watch past episodes of our show and learn even more. We'll continue. This is Hard Money on Sauga 960.
That was great flow, man.
Yeah.
Until I fucking fucked up that buying the peaks thing. Fuck, I read it right off my notes. We got to buy the peaks.
No, you said
That's
you're
it.
buying.
You corrected it right away.
Yeah, you correct. Yeah, it made sense.
I did correct it right away, but I'm just saying, like, fuck, it was good flow. And I'm like, we're almost out to seg 4. It's okay. It's only 1 second.
Yeah.
Flow, man. Let's hit it. We're good, doing good.
There we go. Coming down. 3, 2, and 1. Welcome back to Hard Money. Love talking to you and joining you every week here on the show. You want to reach out to Darren, his team, get that conversation started about hard assets. Most of us could use a lot more of that in our portfolio, possibly have skimmed over it, ignored it. That's why we're here every week, to educate you on exactly that, hard assets, and how to build that wealth as far as your portfolio is concerned. 1-888-335-8645. That would be the phone number. DeltaHarbor.com, the website. And as far as social is concerned, they're all over that as well. And a good one to start off with would be youtube.com/Delta Harbor. That's Harbor with a U. You can subscribe, you can comment, you can learn. So have at her, do more of that. Okay, Darren, back into this. It's truly about timing. I know it seems like this is repetitive, and sometimes you've discussed that history repeats itself. What is the cycle? I mean, how can we learn about where we're at as far as that's concerned?
Well, what we'll do here, I mean, because obviously the radio listeners can't see this, but for our YouTube subscribers and people who come to the podcast, we'll have the production team put up a image of what we're discussing. But the cycle is basically exactly as it sounds. There are highs and lows, and these cycles repeat themselves historically. For example, gold and silver were very popular in the 1970s, out of popularity in the 80s and 90s, and then very popular since around 2000 up till now. And so those cycles repeat themselves. And again, this show is about learning from our mistakes. So one of the mistakes is that we never, ever watch for history repeating itself, yet it happens all the time. The fundamentals that are at work in the gold and silver market, depreciating currencies, the threats of inflation, geopolitics, which create instability and reasons for central bankers to be net gold buyers, and obviously supply and demand. We've seen in the 70s the talk of things like peak oil. Those create cycles. Those flare up the strategies that people use to obtain wealth. And whether you parked your dollars with somebody who manages them or not, these cycles are effectively part of everyday investing. And so ultimately, that's how we come to some understanding of ways to learn from the past going forward. And if we're not watching that cycle, then we may run the risk of buying at the wrong moment within the cycle. Now, that cycle is telling us right now that we're at the peaks in some markets. Real estate's a prime example. Yes, it could go higher in certain segments, but on the whole, we went from 12 months of everywhere in Canada running up and crushing it in terms of returns and becoming very speculative versus just things that we need to put above our heads, the roof, so to speak, over our heads. To making them very speculative investments. And now I think that trend is going to come slowly to an end as interest rates rise and as we get through that cycle. Stock market, big boom. This is the longest in recent history, if not one of the longest times since I've been alive, that we have had a run on the stock market since around 2009-10, and no pullback, no serious recession. Last year we had a blip. We might call it a mini recession due to COVID, but there were no other traditional parameters or variables that caused a long-term recession like we've seen back in the first decade. And if you're looking at the terms of that chart and you're looking at them, we're going to start to hear terms like anxiety, and that's going to be prefaced by things like euphoria. And the real estate market right now is right there. And so if you're watching this on the podcast, you'll see that chart is up right now. And we're right near the very top of what we call the greed buy zone. And that's at the peak of a market. Silver and gold are not there. Silver and gold are down behind that in what we call the more optimistic phase. And this is a growth phase where they're going to start to go much higher, and they'll hopefully be part of your wealth strategy. But ultimately, they're not there at the very top or at where we call the greed or peak euphoric / high anxiety zone. And so ultimately, John, we just want to be paying attention to where that is. And that cycle repeats itself constantly, right? I mean, in 2008 and 9, how many people at the peak of a market were told by the people they trust, their planners, advisors, their bank managers, all of those people, hold on, don't liquidate, don't sell, don't feel like you have to. This is short term. This is not going to last. And unfortunately, it did. They used terms like it being only transitory, that this was a temporary blip. I mean, if it wasn't for quantitative easing, the markets all over the world would have blown apart. And what we would have seen is a complete depression into a zone where the average person lost all of their wealth, all of it, gone. in minutes. And we were right on the verge of that happening. Not too many people held hard assets like gold and silver, which for all intents and purposes for thousands of years have protected people, have given people extra insurance for their wealth. And so ultimately that's where we're at right now. And I don't think that if people are unless they're, completely not wanting to be paying attention, this is the time, and they can justify that. This is the time where we have to hold quality assets in addition to those traditional things that we own. Look beyond the FOMO, the recency bias. Don't listen to all the things that Uncle Pete's telling you about hot stocks and tips and things of that nature. Do our due diligence, diversify, be contrarian, go against the grain, and get excited about our wealth again, because here we are coming into phase 3 in Ontario, and we've got the opportunity of a lifetime right in front of us in assets like gold and silver and other types of hard assets.
1-888-335-8645 to reach out. It's funny about being contrarian and just, making smart decisions and just taking a step back and learning a little more. And it kind of goes along with what we've been saying, with COVID and everybody, not being able to travel and do this and do that. There's a lot of pent up money out there, and people, rather than just blowing it on a 75-inch big screen, which is fine, you need that, but I get it. But maybe look at something like a hard asset, gold and silver, where you say, at the end of the day, maybe I don't have the extra money to get these physical assets into my portfolio. Well, it's knocking on your door right now, and the buying opportunity is there, right?
The buying opportunity is there, John. And obviously, before we go to break, it's important to note, it all starts just simply by going to the website. Go over to deltaharbor.com, take a look at charts and gold, see where we are in the cycle, and we can help walk you through those types of things. But silver is cheap. I mean, it's obviously my favorite metal. We talk about it all the time. I love gold and silver, but silver is very cheap right now. Ultimately, it is a value proposition for those that are willing to go against the grain, to be contrarian, to think outside the box, and want wealth long term, want that extra bit of freedom, want to retire happy, want to retire with more money in their pocket. And that may only be my opinion, but I have a lot of data to back that. And I think that if a person takes a look at gold and silver right now, they'll come to the same conclusion. The story is just too strong. The data is just too strong. Silver is likely to be a metal which trades at 5-6 times the multiple it is right now over the next 4 or 5 years. Gold likely to traverse up towards 3,500 to 5,000 over the next 3 to 4 years. And ultimately, they'll do that because of what we've been discussing, those variables: inflation, geopolitics, uncertainty. And when we go forward at the end of this year, we're going to see an election. And if the Liberal Party, and this is just for the lack of the commitment or the dedication or something that the Conservative Party's made to this whole fold, if the Liberal Party gets a majority, look out. We're going to get new taxes. First quarter of next year, going into the spring budget, they're going to announce brand new taxes. And you can bet your bottom dollar that $354 billion of federal debt that we took on last year, the largest single kind of its history, in a nation in which, of the G8 nations, we gave the most money, freebies, away to our citizens, many of whom didn't need it. We're going to pay for it dearly, all of us. And that is going to mean that we have to think differently. It's going to pull back the stock markets. Real estate's going to pull back. Interest rates have to go higher because they have to be used to combat inflation. Everyone's talking inflation. And so, John, I mean, this is the time when, as an investor, you want to look outside that box. You want to add quality hard assets like physical gold and silver to your registered accounts, RSPs, TFSAs, and to take it home, to store it. And we can talk more about that when we come back in the next segment.
And that's what we saved the last segment for. Always, we've whet your appetite, and we're going to tell you how to get involved in this physically with Darren and the rest of his crew. To reach out by phone, 1-888-335-8645, deltaharbor.com, Harbor with a U, online. And as we've been mentioning, the YouTube channel, youtube.com/Delta Harbor as well. We'll continue. This is Hard Money on Sauga 960. All right, welcome back. A few minutes to go here on Hard Money. Thanks for joining us this hour, and you can join us every week as well, be it virtually if you want, on social media, youtube.com/Delta Harbor. Good old phone always works to pick up and talk to Darren or a member of his team, Rob or Roy. Get educated and learn something about hard assets. Maybe you don't have a simple ounce in your portfolio. Well, you can change that. 1-888-335-8645 and deltaharbor.com. And the looming question that we always say for the end, people want to know, Darren, how do we do it and why Delta? Why Delta Harbor?
Well, again, with respect to Delta, the entrance to this market in gold and silver and learning about other hard assets, but gold and silver is our mainstay, is simply the website, deltaharbor.com, and that's harbor with a U. And you always say it because it's always about the investor.
Mm-hmm.
And so if you go to that website, you'll be able to do a ton of learning. You can call us directly. You can use the number that you give out, John, and call us directly. I'd be delighted to speak with anyone that has questions about owning gold and silver, about the gold and silver markets, about product types, pricing, and it really starts there. And ultimately, why Delta? Well, number one, as we're learning very quickly over the last few months, we're cheaper than everybody else. That's one reason alone. It doesn't imply that we're cheap as a firm. Certainly, we give value wherever we can. That's why people like Delta, not only because they get the most affordable gold and silver, but we stick to a handful of products in both gold and silver that we know we can beat everybody else on. And that is a mainstay for us, very important, and not by a little. I will say one of the largest providers of silver maple leaf coins in the country of Canada, if not in North America, resides in the west of this great country, in fact, in Alberta. And we beat them hands down on a week-to-week basis every single week. And people come to us simply just because of that alone. Now, that being said, we're not necessarily just an e-store where you can go and buy retail. We put a lot of time and effort into discussions, into consultations, into sitting down with the clients and talking about their wealth and understanding where they're coming from. What are their goals? You know, we're not here to manage your portfolio. We're not your financial planners. We leave that up to professionals who are in that realm. But as it relates to gold and silver, we can tell you everything there is to know about the products, about storage, about how to store it, about how to move it around the world. Maybe you have a reason, you're a listener to this show that's from another country or has ties to another country, and you'd like to have gold storage in the US or maybe in Asia, or maybe down in South America. We have options for you that make it easy to transport gold and silver. Keep it liquid, buying and selling by phone call always. And that is always available to you. But in addition to that, John, people can just simply buy and take it home. Lots of our clients like to have the product at home with them. There's a risk. It's not insured, but it's not my choice to make. It's theirs. What's best for them. And we can do that as well. And we ship across the globe. Here in Canada, any purchase over $1,000 is always free shipping. And 99% of our product is usually our purchaser over $1,000. So usually that goes out and gets drop shipped to you with tracking. It's insured. But that discussion point about being good people, good individuals, really resides full time in our thinking. And we're good stewards. We talk to people. We spend a tremendous amount of time. I was on the phone for 2.5 hours with a gentleman the other night, and his budget was $500. And he just wanted to have a level of comfort as he just never had that before. He spent copious amounts of money in the investment world and never gets a phone call from the people that he's invests money with, never hears from them. They send emails or quarterly reports. They're antiquated, hard to understand. There's a lot of reasons why it's good beyond just the investment quality itself to be involved with a company like Delta Harbour that really looks out for their clients, that really pays attention to the gold and silver markets, and that are experts in that arena. In addition to that, I'll tell you, John, we can do a lot more with gold and silver than the average company can. We have a lot of options.
So how do you open an account? I'm interested. I want to go for it. How do I do that?
Well, you start by just simply giving us your information there on the site. You can open an account right there. You can tell us which type of account you're interested in. Are you interested in registered accounts where you can put gold and silver into an RSP or TFSA using existing money, by the way, from other institutions? You can pull it away from any institution you want, put it over to our partner Questrade, have an account there, physical gold and silver in your TFSAs, RSPs, RIFs, LIFs, liras. Those liras can be converted to lifts. and you can do the conversions when the timing is right for you, but in tandem with what the regulatory bodies suggest you do when you're converting RSPs and so on and so forth. You're able to just make a straight purchase by calling us and setting up an account, funding your account, and then making the purchase with the funds that you sent in. You're also able to store. Storage is an option. We can talk about that, but opening up that account is either the phone number or the website, and tell us who you are. We'll get back to you, and we'd love to spend some time talking with you about our metals and what we do.
Again, 1-888-335-8645 and deltaharbor.com. Want to let's spend the last minute or two talking about this, and you always say it's your favorite metal, and I guess it could be a lot of people others' favorite metal after you tell them why, but which one is it? And I think it's silver, but you give the details here last minute.
It's silver. It's silver. Silver, people may not realize, is in every single thing we touch. I'm staring into a camera right now, which has silver in it. I'm looking down at a computer that has silver in it. I'm picking up a cell phone that has silver in it. I'm staring at a TV behind the camera that shows notes from the show that has silver in it. There are lights inside of our little studio here in the office. Silver is in that, and it is in everything, and we can't live without it. We really can't. One of my contemporaries, one of the analysts in the marketplace, David Morgan, once did a show talking about how we can't survive without silver, and it's the truth. It's in water purification, solar systems, solar panels, silver, batteries for electric vehicles. Think about how that is going to boom and draw from the available supply of silver over the next 5 to 10 years. Think about countries that are moving to complete solar grids. India, California, in the US, huge. Here at home, we lost our subsidies in the solar programs. That's going to come back at some point, but people are already ahead of the curve, moving to solar in a lot of functions. I'm part of the cottage world. There are everywhere solar generating power plants that are on top of cottages, on the sides of cottages, that's all places where we use silver. I love silver for that reason, and also because it's cheap, John. And ultimately that goes hand in hand with what we said about those variables of threat of inflation, depreciating currencies, geopolitics, and supply and demand. You got to own some. And I believe that if we're learning from our mistakes, diversification, contrarian thinking, working against the grain, know where the cycle is, do your due diligence, and you won't repeat the same mistakes that we've made as a country before.
Great way to wrap it up for another day, brother. You want to reach out to Darren, Rob, Roy, the team. Here's how you do it one more time before we sign off for another week. 1-888-335-8645, deltaharbor.com, harbor with a U, deltaharbor.com, and on social media, YouTube, to put a finer point on it, youtube.com/Delta Harbor as well. We'll catch you next time. Hard money on Sauga 960.